Netflix was upgraded today with a $300 target price and is one of the few spots here that's actually holding in the market. Looks like it can push higher. Netflix today with the upgrade by Evercore with the $300 target price, saying that the majority of people with ads, they're off. That's what their point is, and that they're estimating that this ad business is going to be higher than expected. Now, whether or not we know that or not, we just simply don't know. What we do know is that we were up here around 700. Now you're gapping down, then you have another gap down. But since then, if we take a look at the earnings, you've never, even though these earnings were bad, poor, these earnings were not a bright spot. Even during all this, you have put on this kind of bottom where it just seems to have gotten to a trough. And there is some validity to the fact that when these stocks drop from their peak to trough around 80%, they do tend to find some kind of bottom. You got down to about that 76, 77% area. So this does make it interesting. Make sure you subscribe to the channel and click all notifications, because what we go over here is very timely. Now, this was when we actually traded today in the trading room. This was a very simple trade, and I'm just going to kind of walk you through parts of it. So you can see down here that you kind of have this V bottom. I mean, we can all kind of see that V bottom. I'm going to go through quad witching in a moment here and what to expect for tomorrow and what names you should be looking at and why FedEx is blowing up overnight. So you see this V right here? So you have a gap here and a gap here. So now we have this island reversal right here, right? We break to the downside, everybody's short, then gaps up on the upgrade. Well, now you have essentially a lockout rally where the people that were short over here that were feeling really good just had all their hopes and dreams smashed. So we push higher. So this was something that we actually did in the trading room. I think we got in around 235 and change and traded up a little bit. And now I'm going to just give you the way that I think you should be looking at this market right now. Staggered stops and trimming into strength. So what we've been doing is just trimming directly into these spikes and then leaving enough on with a very significant point. Right? So in other words, if you break here, that's it. But by trimming out of this, this allows us to hold to here, and worst case scenario, it's a break even. If you don't want to do that, you just sell into strength. But this did what we thought it was going to do. Later in the day, we spotted this pendant pretty clearly. And then you saw it break that pendant, and then it gave us another opportunity to even get in here off of this morning star. People recognize that pattern clearly, forms a flag, bonk, tries to break out, and then you just kind of have to drill into your levels. So you can see very clearly here how Netflix went right to that 242 and said, that is enough, I've had enough, and then rejected. As soon as that happened, we scaled that more, left like 25% off, and then when the market sold down, we got out of it. The question is, what do you do now with it? I like the upgrade, and I like the way that you're holding in this market. I think it's very important to start looking at stocks that are not taking out lows right now and seeing some semblance of holding. Now, we don't know when we're going to bottom, right? We have thought that we were going to bottom before, then we have a bunch of other news that hit tonight that we're about to get into. We don't know, right? We can opine on it, we can talk about it, but we just don't know. What we do know is to look for pockets of relative strength. I can just tell you, since this June low in the indexes, we've done nothing but trend higher. So it does seem like you are extremely washed out after that 80% drop. So I would put this on your watch list, and I'll probably cover this in greater detail on Saturday. Now, Tesla, I want to go over. Everybody's sitting here. We're all waiting for the end of the world. We're all waiting for a limit down, and we should probably discuss the VIX and why it's not moving, because it's very simply not. We're watching the bond market spike, which we will address. How is the market going to go down if we're going to see stocks like this go up? There's some very large disconnect. So this is either setting up for a really bad day or this big correction that we're all expecting. Maybe it's not going to go the same way we think it is the best way that I can say it. So I'm not saying that you should use one stock, but you need to kind of be looking at this and going, okay, so this stock has got the highest beta out there and it can't break. They're not breaking it. All right. So you're not breaking it. And yes, technically we're going to go through the index levels. So I'm not breaking it. So this is a sign that you need to pay attention to. I'm not saying you have to be involved in it. This is something we've been involved sometime in the trading room, and we've done okay with it. I showed this in the trading community today, and it just gave us spots all day if you weren't already in it just to buy it. And it held up quite nicely. And it's really one of the only stocks from the gap down that's a large cap name that has just been grinding higher. So you kind of go where the money is. And when you see that these names are breaking down, like we just saw with Netflix, but they're going higher, pay attention, because there's not a lot of names that are doing that right now. So I would use this as a bellwether. You know, there was this interesting development where Apple is now the most heavily shorted stock out there. And that's kind of interesting because it used to be Tesla. So apparently we've gone from here, right, where we all love iPhones, we all need a new iPhone, to no one's ever buying an iPhone again. So we're kind of getting to this point where the sentiment is changing so fast and so rapidly that I would expect some kind of volatile move to happen in the market shortly. Now, whether that move is up or down, you know, I don't know. And I don't think anybody knows. I think anyone that's going to look at these charts we're about to go over is going to say we're going down. And if I was a betting person, that's kind of how you have to lean. But you need some confirmation. What I'm trying to point out is when you see massive swings in sentiment. So here, everybody loved it. Powell spoke for approximately 8 minutes. Everybody hated the market. Here, everybody loved Apple with their pre-sales. Okay, all of a sudden, nobody wants to own Apple anymore. When you see these kinds of sentiment changes, you need to pay attention, because when you have these kinds of fast changes, that means that you're pretty much getting to the end of the move, not the beginning of a move. Remember over here how easy it was, and we're going to do this on the indexes, but they didn't break right away, did they, on that news, right? Inflation's transitory. We might have to do a rate hike. Okay, this took weeks. This is not taking weeks. It's accelerating. So we want to pay attention to that. Now, if you were to look at SQQ, if it was anything else, now, if you were to look at SQ, anybody would be looking at buying this, right? Let's just say it wasn't the ultra bear fund. You'd be looking at this and salivating. You're now breaking your downward trend line. And I'm not saying that it doesn't look like it's a great opportunity to short. What I'm simply saying is to use your head. And when everybody else wanted to get in here and wanted to buy at this level, within 3 days, it lost 20% of its value. So just watch this very carefully. You're going into quad witching tomorrow. Now, this is Investopedia. You can go and read it for yourself. It's a free website, but this explains it in great detail what it is. Very simple. You have 4 different types of contracts that expire tomorrow. Stock index futures, stock index options, stock options, single stock futures. They all expire tomorrow. What does this mean? You can expect volatile times off the open. Usually you will pin to a level. The level that we're looking for right now on the SPY seems to be 390. Whether or not we hold that tomorrow remains to be seen. The majority of options on the Qs are actually a little higher, more towards the 300 level, so it doesn't really seem to care, does it? It seems to be sitting right here at 290, so we're going to see how this plays out. But what you can expect tomorrow during the day is massive swings in the first half hour, and then you're going to watch those swings dissipate. And then you're going to flatline as they take those 4 asset classes and just arbitrage between them. And then you'll see more volatility as they unwind and put on new bets at the end of the day. If you were to look at the Qs right now and you were to look at the SPY right now, there is nothing redeeming about this. Nothing. You cannot look at this and say this looks okay. So if you see here how you're setting up, this is what we refer to as a 3-bar pattern. It broke. That's it. This is a wrap, technically. Am I shorting here? I'm not. I just am not comfortable shorting going into quad witching, knowing that the games that they're playing. Could you have shorted today? Sure. There were a bunch of people in the trading room that did that, and they did it off the levels that I kept marking. And it worked. It worked well, and you made some money off of it. You just want to be really careful tomorrow. And you just want to just really focus on what's going on out there. If you look at the SPY today, I anchored a VWAP to this. This is a great time to actually use anchored VWAP because you have a very definitive marking period. But even without anchored VWAP, you can just see these dojis, right? So even if you don't use anchored VWAP and you just understood how to use dojis, I mean, this just gave signal after signal, right? As soon as you break, there's your sell signal. As soon as you break, there's your sell signal. It's not rocket science. So once you understand these patterns, life gets easier. As if we didn't have enough to worry about between quad witching, the technical analysis, and everything else going on, we should just be aware that FedEx is imploding after hours. Closed at 205 at 174. After hours, FedEx cut costs to include flight frequencies, temporary parking aircraft, deferral of staff hiring, closing 90 FedEx office locations. Okay, aggressively accelerating cost-cutting efforts, evaluating additional measures to enhance productivity. Okay, this is not what you want to see. FedEx expects benefit of cost actions to mitigate effects of reduced demand throughout the remainder of 2023. They're telling you that they have an issue. If they have an issue, Amazon has an issue. Okay. Anybody that's selling online, they're going to have an issue. And you're going to see them come in. You're going to see UPS come in because of this. So you're going to have to watch these, and you're going to have to watch these levels very closely tomorrow. Now, after hours, you're not really seeing it move the indexes that much. You are seeing some movement, but you're not seeing them really implode. You basically are at the lows of the day. So keep that in mind. There is a lot going on out there for tomorrow. And what I would do is I would just focus on the beginning part of the day and the end part of the day, and just stay out of the way until it settles. I would stay out of the way and just let this sort itself out. You know, this is a very, very tough environment, to say the least. Fed next week as well. You really need to pay attention to that, because that's another macro event that you're going to have to deal with. And it's not going to be pretty if they do 100 basis points. And if they do 50, we could go up. So any technical analysis I do is completely, it's just moot. You can do all the technical analysis you want here. If Jackson Hole, if he gave a great speech, we went higher. If CPI was lower, we went higher. It has nothing to do with technicals. So you need to understand that macro is in charge of the market right now. Keep that in mind. Everybody stay safe out there and trade to win tomorrow.